welcome to Mint. In today's edition of From the Newsroom, I'm joined by Pallavi Pengonda, and we are here to discuss about Reliance Industry's second quarter results. The company announced the results after the market hours today. So Pallavi, we saw that the net profit for the company increased around 1.5% compared to a year earlier, and the revenues for Reliance Industries crossed the 1 trillion mark, which is around 15% increase from the last year. Have you seen any specific segment-wise performances for the company?
Yeah, so the company has three major segments: the petrochemical, refining and the oil and gas business. For the September quarter, the petrochemical business was expected to do well, and the good thing is that the petrochemical business has done much better than street expectations. On the other hand, the refining business performance has been in line. As you know, the GRMs have declined on a sequential basis, but that was more or less expected. E&P business has again sort of disappointed the street, but that was also expected because of the production problems of the oil and gas business for RIL.
But then we also saw that the depreciating rupee had somewhat of an impact in bettering the EBIT margins, even though the GRMs had a sharp correction.
Yeah, that's true. And also, I mean, which is why I think they gain more from pricing rather than volumes in the September quarter. That's what has happened.
Right. Some of the analysts that I was talking to pointed out that rupee depreciation is one of the factors, but again the petrochemicals business and the exploration business both have shown a better improvement compared to the last quarter. Do you think that the analysts are on the right track when they say this?
Yes, the petrochemicals business has done very well, much better than expectations. For example, the EBIT margins have improved on a sequential basis, and even on a YOY basis, the EBIT margins have improved. The contribution of petrochemicals EBIT in the total EBIT for RIL is 41%, which is quite significant. But E&P needs to there needs to be more good news in the form of clarity on gas prices and also production improvement. But production improvement will take some time, so I wouldn't quite agree on the E&P business front.
So there are a lot of positive news in the release that Reliance, and is that going to be a positive for the stock also in the coming quarters, because you cover stocks so closely? What is your take on that?
So for Reliance, I mean, obviously the good results are an important factor for investment sentiments, but in the near to medium term, the core businesses, which is the refining and petrochemical, the outlook for both the businesses is weak. So I mean, the stock is also likely to follow that. For refining, there is expected to be an excess refining capacity in the operating environment. So refining business is tough, and even petrochemical outlook is grim. So sentiments for the stock are not so great right now. So the stock, I mean, if you're looking for a sharp re-rating post results, that's unlikely to happen.
Okay, let's hope that the third quarter brings much more cheer than this quarter. To know more about the Reliance Industry and how the company is performing, please visit www.livemint.com.